Good morning, everyone.
Good morning, Luca, and everyone.
Jaya, you sound really rough.
No, it's because of my hay fever.
Oh, okay, so
very badly, yeah.
So we're fine. Okay, good morning, Joe. Good morning, Tamzin and Stan, Krista as well, and Abby. Hello, everyone, and Jonathan is with us as well. Just give me 1 second. Jaya, maybe your co-host, if you don't mind. As well.
Sure, Luca. No worries.
Okay. And we okay. So good morning, everyone. Another interesting week, I say, in the markets. There's a lot that's going on, right now, and it's interesting for those of you that haven't yet entered the markets, and also interesting for those of you that have. So there are things to to take notice of in other case. I wanted to go and start sharing with you straight away. So I need to be off on time today at 9 o'clock. So let's get straight into it. Let me go to the browser. Okay. So can you all see my screen right now? And just confirm that you're seeing this chart.
Yes,
Yeah.
thanks.
Perfect.
Yes.
Okay. Thanks. So obviously, as you will be aware of, that this past week, we've broken below the 2017 top, which I have marked here in this chart. This is a Bitcoin chart in USDT, which is the most liquid stable coin. Now, the reason why I wanted to show you this in particular is because this is very significant. Okay, it's the top that was reached in 2017, and normally when there is such a high important line that gets crossed on the way up, it becomes a strong resistance on the way down. And what kind of, like, the people have been asking, is price now, have we reached the bottom? So is price now starts to go up? And this is the lowest it will ever go. Now, looking at this chart, this is not telling me that personally at all, because if that was the case, then you would see a much stronger bounce from the bottom. Sorry. So you would see a much stronger bounce. Normally you see when price enters something like this, you'd see big bounce, a retest of this, and then the price starts going up quite strongly. Now, nothing like that is happening, and we're kind of just hovering around that that historic price level, which is just short of 20,000. Okay, so 19,800. So there's a high likelihood that the price will revisit this area and probably keep going down for a little while more before we start going back up in price. Now, having said that, what do you do both as a new investor and as an existing investor? Now, the first thing to realize is that now it is the time to take charge of your investment, in the sense that there is kind of quite an elevated risk of keeping your tokens on, entrusting your tokens to a third party. Maybe, whether that is called, an exchange, or Celsius or Nexo or any other providers. Okay, so there is a risk associated with any third-party provider at the moment, because what most of them, what their business model is that they take your deposits and then they put them to use. So they use them in decentralized finance for lending and borrowing. And so sometimes they have got, they're not completely liquid. So you can't just take the money out whenever you want if the market conditions are extreme. And now at the moment we are seeing extreme market conditions. So we've had not just Celsius, that, as a lot of you might be aware, have halted withdrawals and trading and anything else. There are other exchanges as well. They have taken the same steps. So this is your money that is being deposited in these exchanges, and you can't get access to it, and you don't know if these providers are going to have the liquidity going forward to pay you back. Okay. Now there are some things, for example, that have been they have taken up from the news just to make you realize that this is not a small thing. No, this is in particular Three Arrows Capital, which is an investment fund, in crypto, kind of like a hedge fund. It has been liquidated. All his position has been liquidated, but by the exchanges that they were using. Now some other so obviously this is following, obviously the drop in prices of the whole crypto market, but also the Terra collapse, which many of these providers had invested in, and more general, and also something not to be taken lightly as well is the fact that some of these providers have got a large proportion of their Ethereum as well locked into the Ethereum staking contract, which means that the coins are not accessible until the proof of stake blockchain launches on Ethereum. Okay, and obviously up to date that hasn't happened yet, although we keep hearing that it is imminent. So it could be any time in the next 2 or 3 months. But we still, at the moment, we're still not there. So these providers don't have access to their Ethereum either. So they're all things that we need to take into consideration. Now, obviously, I don't want to scare you, but there are being let me see, there have been cases already that other crypto funds and exchanges like Voyager, for example, is a big exchange in the US. They haven't halted withdrawals, but they limited the amount of money that you can take out of your account. And again, guys, I just remind you, this is our money that is deposited in these accounts. It's not theirs to do what they want with. Okay, so it's money that we've entrusted to them to trade. So as an exchange, and one of the things of any exchange is that you should be able to take funds in and out easily and without limitation. Now they've halted the withdrawals from 25,000 per day US to 10,000 per day. Now we don't know what's, again, if they're going to then further come in and halt withdrawals altogether. But there is let me see, just trying to find, I've got so many tabs open. Let me just close one as we're going through things. But there is another fund that has gone, another exchange that has halted withdrawals altogether. Now, it doesn't mean that they are going to go completely bust. So, a lot of these funds I'm just hoping that the crypto prices go up again so they can pay money back. That they are kind of literally they've got the hands tied, and they've got overexposed to crypto in a way that makes them vulnerable. Now, on this subject, there is a debate going on in the market, and here we see Binance that comes into the debate, saying that some projects are just bad projects that shouldn't be saved. And on the other side, we got the the FTX and its CEO Sam Bankman-Fried that have instead is taken the other side, saying that it says some projects need bailing out, and we know that is FTX and SBF, at the one of the main players behind Solana, for example, and they do think that some of these projects need bailing out and need supporting. Now, it is in a way a recipe for disaster, because at least is according to my opinion, because this is what is causing problems in the fiat world, and we would just be importing the same kind of way of dealing with problems that we're running away from by creating this new financial system with cryptocurrencies. So although it's painful in the short term, this is what Binance is saying, that they're saying these are just bad projects, and they should not be saved, because although it is painful to a lot of people, and this is why it's saying why, because these projects have a large number of users, they often have been acquired through inflating incentives. So in a way, it's like just marketing or just pure Ponzi schemes in some cases. And so why should we protect these projects and basically burden the whole industry, while we could actually learn from the experience? And pain is often a very good teacher, I would say, and then move on, so that these problems don't happen again, by condoning sometimes these bad risk management in a way, and diversification. You are basically keeping these problems in the crypto industry. So it's an interesting debate that is going on. But here as well, they were referring to what I often talk to you about, which is zoom out. To say if 2 years ago, in 2020, you have told somebody that the price of Bitcoin would have been $20,000, you would have been pretty happy, because the price was below 5,000 back then. So it's sometimes we need to just calm down and take more of a slightly long-term perspective to understand not just what's good for us as individuals, but also what's good for the industry, because this is still a very new, very green, not mature industry, and really we all have got in a way, we got a duty to make sure that it is built in the way that we want it going forward, and that these errors are not embedded in the industry itself. Now, I think that let me just do a few interesting. Start from the heavy ones, and then we go to the lighter news afterwards. I'll close windows as we go along, so at least my computer doesn't completely seize up. Now, this is an interesting thing. Always talking about Binance. They've announced that they're now Bitcoin trading, spot Bitcoin trading on the platform is going to be fee-free. Not just the fact that they're not going to charge a commission, which was low anyway at 0.1%, but also they are not going to charge a spread. Normally when you trade, you get a price for buying and a price for selling, and the difference in those two prices is called the spread, and that's generally the commission that the broker pockets, because put some buyers and sellers together, and they all the difference is what they earn. So very rarely, when you read commission free, whether it's for when you go on holiday, that you exchange your money for the local money, is never really free, because that's the price that's hidden in the sell price and buy price difference. So it'd be interesting to see what's going to happen with this, because this is going to affect other exchanges. The moment Binance was charging 0.1%, Kraken charges between 0 and 0.26, Coinbase again between 0 and 0.5, and FTX between 0 and 0.2. So So we'll see what happens in the past if other exchanges will have to follow suit as well for for Bitcoin trading or not. But we could be moving to a different model from exchanges where they make their money in other way, like on the Robinhood style of trading, where they were selling the order flow and making money on that rather than making money on commissions. So we'll see what that does, but in a way, it's good news for us, retail users, because this is not just going to be applied to high volume purchases, but even on lower volumes. So even your $200-300 purchase that you do, that will attract is will not be charged commission on. Okay, let's close this. Let's go on to this other one. Now, this is one of the reasons why it is important to start to move your coins and start educating yourself on how to do things in a decentralized way. It's not just that, I'm saying it's not that you need to, in particular, be scared of, authorities knowing about you because you're doing anything wrong. At the same time, do you want all your transactions to be controlled, and whether you have to justify everything you do when you move your money around? Is that the role of an authority? Do you want, just imagine if you have to justify every time you use your bank account or every time you spend some cash, and this is where we're going. So we need to be careful, because this is saying that every time you move money off an exchange, off Coinbase, and moving it to a different users, you have to justify who this user is, have the recipient's complete residential address, and it's kind of like worrying, to say the least, because I haven't got anything to hide either, but at the same time, I don't want somebody knowing everything I do. I don't think this is a good place to be, and we never had this in the past. So just think about it. Up to very, very recently, cash was still dominating as a mean of exchange. So why all of a sudden, now that transactions are digital, we need to justify everything we do? And I only see personally as apart from being an invasion of privacy, I'd see it as a kind of like a road again to a place where I don't really want to be, because there are things that governments should do for everybody. I don't think this is one of them. But you might have a different opinion. I don't want my government to control my spending power to the and this thing, the way these things go, just they start on a big level, saying we fighting terrorism and crime, financial crimes and everything, and then slowly the threshold gets lowered and lowered, where everything you do is controlled. And yeah, we don't really want to go that way if we can avoid it. Okay, move on to that. Now, interesting things. Both Tether and Circle, which is the entity that controls USDC, are launching new stablecoins. So this is interesting because the Tether now is planning to launch a stablecoin pegged to the British pound, and also they also launching. I'm not quite sure if this has been launched yet or not. Another stable coin that's linked to the euro, another one linked to the Chinese yuan, and one to the Mexican peso. So as you can see now, the industry is getting a little bit more grown up and a bit more mature, and there are more assets that can be freely exchanged between the fiat world and the crypto world. So this is what Tether is doing. In particular, there is this announcement that just came up today, but also Circle, so the USDC, are launching this EuroC, which is a euro-pegged stablecoin, and at the moment, USDC is growing its share of the market compared to Tether, because they seem as a lot more transparent. And Tether is made some announcement that they're going to move to be more transparent as well. So we'll see what happens in the near future. But as I showed you last week, Circle has they put they have accountants that are checking the level of the reserves in bank accounts and compare them to the issuance of USDC. And there is a report, so you can check all the time if the two things match or not. And there is an outside controller that reports on that level. So anyway, it is interesting to see now that there are new forms of stable coins pegged to different assets there than the US dollar as well. And it will make more easy as well. As you can see, as these stable coins become more commonplace and become more used and grow in the terms of the amount of stable coins in the market, you can see how easy it would be to use this in a way as an online currency exchange, because the trading fees between these stable coins will be very low, and so you could be in a way for the stable coins that are supported, you could in a way create your own bureau exchange and move your funds freely between different currencies, which is definitely an improvement on where we are right now. Okay, close this as well. Now, this is interesting in terms of the future of cryptocurrency. We often talk about the SEC in the US. This is what they were talking about regulatory agencies about the US. So it's not the most interesting subject of conversation, but it's been important because as you know, in the past year or so, the SEC has become very, very militant, almost like fighting cryptocurrency and trying to regulate it as a security, and really limiting the possibility of things that can be done in cryptocurrency in the US. Now, there seems to be a kind of more of a let's say it's growing as influence within the agency. The influence of the Community and Futures Trading Commission, that it looks like this is going to be the main agency to regulate cryptocurrencies going forward. So this is discussions that are going on in Congress, and so there's a high possibility that this is going to be the commission that will look after cryptocurrency. Now, why is this important? Because this, first of all, is seen as a light touch regulatory body compared to the SEC, but also because of what it is saying. That so this is the entity that regulates commodities. So are we saying that then that the cryptocurrencies are commodities? Because this is kind of like almost like a halfway house between securities and currencies. So it's really interesting. It's really interesting to see how we're moving, because I think the next stage of growth in crypto will come together with regulation. So what that regulation looks like will have a big impact on what the crypto markets look like. Definitely, the CFTC, I would say, have got the knowledge and the talent to deal with this. and it would be definitely be an improvement for the whole market if going forward they take a leading position on regulating cryptocurrencies, because we know the regulation is coming anyway, and so we'll see. It's better to have a light touch regulation connected with also self-regulation from the point of view of the industry, and then having strong regulation imposed by by the top, and aiming to control the industry in a way that is not meant to be controlled. Okay, close down as well. Now, some of you might have noticed as well that Polygon was one of the coins that went up quite sharply when everything else was going down. Matic went out about 25%. Now, one of the main reasons why that happened, and we try to look into, when these things go on, and you think there's something that goes completely against the trend, try to find out what's going on. And it's because Coinbase has announced support for Polygon for funding the accounts. So you can send assets into and out of your Coinbase account using Polygon, and this is interesting. So as the user base grows, generally you then see places like Coinbase, exchanges like Coinbase supporting a larger number of networks to enable payments in and out. So we'll see. The one thing I'm looking at with interest is to see if and when Coinbase will allow, for example, the Binance Smart Chain as one of the access to the exchange. It's kind of to see enemies working together. I don't know if that will happen or not, but I'm keeping an eye on it. On a different subject, and talking about Binance again, you might have heard that the Binance closed a deal with Cristiano Ronaldo for creating NFTs. So obviously it's a big move from the point of view of getting the Binance name out there and linking it to like a household name like Cristiano Ronaldo. And it's interesting as well, kind of like a tweet from the founder, which is kind of like a dig to other projects. It was not easy saying no to Super Bowl ads, stadium naming rights, like Crow, for example, large sponsor deals a few months ago, but we did. Today we are hiring for 2,000 open positions for Binance. In a way, he's telling the industry is that we are building the right way. And I know it's a bit funny as well for something like him to say something like this, because one of the criticism to Binance is that he moved they moved too quickly in the beginning, and they didn't have all the structures in place to deal with the compliance in many different countries. But it is interesting because they are making a lot of moves in crypto, and at the moment they are one of the strong pillars of cryptocurrency. So we all need some strong players in the industry to make sure that there is some stability as well in the in the whole cryptocurrency industry. So this is the article. You can go and read if you want. You just type in Binance and Cristiano Ronaldo. Okay, this is we already covered. Another thing that's interesting, and let me see, I think I've got a better, I can show you on a bigger screen. This is the amount of Bitcoin held by the biggest players, and you can see here on the bottom the 30-day change of Bitcoin held by different size of portfolios. So this is what the top one on the right, if you can see the last one on the right, the people that wallets that hold more than 100,000 Bitcoin have actually grown in the last 30 days by almost 17%. So as the price has gone down from 30,000 to below 20,000, the biggest holders have accumulated. Okay, and it's funny actually to see some of these statistics, because if you can see, the biggest holders have accumulated, but also some of the smaller ones from 0.01 to 100 Bitcoin have also grown in size. The ones that have gone down are, and these are generally from 100 to 100,000 Bitcoins. So these are generally our institutions, you know, they have sold some of their position because they've been forced to, kind of like exchanges, you know, hedge funds and something like that. They have overexposed themselves, okay? But the ones that are there for the long term are actually accumulating at this price. And it's interesting to see because those are the ones that have the biggest interest in holding up the price of Bitcoin as well. So they're not, the good thing is that they're not selling right now. Okay, so it might make you feel a little bit better about your you know, your portfolio if it has gone down in value extensively.
One quick question: if you've got if the people that hold over 100,000 Bitcoins has gone up by 17%, where have they got all of those Bitcoins from? Because the percentages of reductions just don't seem to add up, especially when it's smaller ones.
It's not this. I mean, it's not looking 16 minus 4. It's not that easy, because these groups may be much larger than this. It's just telling you what's the size of. So
understood. Okay, I understand it, but it seems strange. But the whales are growing. The whales are growing their portfolios, aren't they?
Yeah. So they're basically this is what this chart is telling you. And so if you mark difference in, you can see here that this red line is this group. Okay, so from January till now is pretty much stayed stable, and then it started going up as the price started dropping. So this is the way to, you know, to see it. So these people have seen an opportunity. Rather than, you know, rushing to sell their positions, you know, when price started going down, they kept their positions all the way, and although, you know, this has been a sideways first half of the year, as you can see here. So we've gone from 47, between 47 and 30 really for most of the year, and then we had this big drop. Okay, no problem. So this is the same thing. Oh, this is the one I was looking for at the beginning. So CoinFlex, which is another cryptocurrency exchange, it's the latest one that has halted withdrawals altogether. So it's frozen withdrawals. This is why I'm saying, I mean, this is not the time to have most of your cryptos locked on exchanges. And I would make sure, you know, if I were you, I would educate myself and be ready to move your funds away from exchanges, because in periods of, you know, high extreme market conditions like this, there might be many players, including some of the big ones like Celsius, that go out of business altogether. And if you got your funds locked in there, you might struggle to get them out altogether, or you might only be able to get out a fraction of it. Okay, I don't want to scare you, but it's something you should consider. Karen, have you raised your hand?
Yes,
Yeah.
yes. So I was going to ask at the end, but since we're talking about it, let's ask now. So basically, I've got funds on a number of different exchanges. So I'd like to get it off the exchanges. I've got a ledger and I've got several wallets. So I've got like Exodus and I've got MetaMask and stuff like that. So it's a bit like, well, where do I move what? And do I just chuck it on a decentralized exchange, or do I put it in a wallet? Where's the safest place at the moment for it?
Yeah, decentralized exchanges don't store anything. So decentralized exchanges is just what it says on the tin. So they just exchanges where you exchange
Right.
the tokens.
Okay.
The tokens go from wallet to wallet. So it's either keeping on a centralized exchange or you keep it on your wallet. And this
Right,
wallet
so it needs
can
to
be,
go onto a wallet then.
Yeah. So the wallet can be a hot wallet, like MetaMask, like Exodus, like Atomic Wallet, Math Wallet. There's so many out there. Or it can be a cold storage wallet, like like your Ledger. But also, for those of you that are interested in doing this, you can connect your MetaMask to your Ledger. So you could have things on MetaMask if you want, but also have to authorize all your transactions with Ledger, which is, in a way, it could be sometimes, the best of both worlds, in a way. Because something like MetaMask makes the transaction easier than just doing it directly from Ledger. It's got that ease of use that a Ledger can't quite do yet.
So would it be safe enough, do you think, if I just checked all of my Ethereum stuff on my MetaMask and all of my Bitcoin type stuff on my Exodus?
It could be. I personally prefer. It depends on, it's not kind of like a straightforward answers, because it really depends on what you're doing with these coins. If they long-term holds, they're long-term buy and holds, I would completely put them on cold storage. So I prefer have them on my Ledger, because Exodus, although it is a hot wallet, so there is still some risk, not risk with the actual provider, just risk with your computer getting hacked. So that's because it is a software. It is a software wallet.
If I put a VPN on it, does that decrease the risk?
Yes, it does. It does, but it's still a software. A piece of software on your computer. So you get a virus or something that compromises your computer. You might be in trouble. So it's I'm not want to scare anyone, but you need to be aware of
no, it's good points, isn't it? Because I think it's really cheeky what Coinbase are doing there, and that's that is exactly what I'm moving away from. I'm looking into unbanking and stuff like that, because I don't like that current system where people that shouldn't have control over you have control over all of your money.
Exactly that.
There's no way that should happen. That's way too much power to give to to people who don't make the best decisions for us, basically.
It's exactly that. It is exactly why Bitcoin was formed in the first place, and so that's what we've got to keep in mind as going forward. Okay, let's just cover just a couple more things. Let me just close this. Crypto Whales, etc. A couple more things interesting, like for those of you that know DYDX, which is a decentralized exchange. It's interesting because they had launched on Ethereum and on a kind of a layer 2 solution. They are now moving from Ethereum to Cosmos, and they're launching their own blockchain on Cosmos. And Cosmos is gaining a lot of traction in terms of being completely, apart from being decentralized, but also offering the widest possibility of linking different blockchain projects together. So Cosmos is seen a little bit like an internet of blockchains from that point of view, and it's gaining a lot of traction. It's been on my radar for a long time, and I've got a lot of time for Cosmos, for the Cosmos ecosystem, and it's one of the good boys, let's say, together with other things like Cardano, etc., Polkadot, etc. Okay, so moving on, the other kind of like big news is that Solana looks like to launch its own mobile on the Android platform. that will be tightly integrated with the Solana blockchain. So to make it easy and secure to transact in Web 3.0, manage NFTs and and tokens, etc., etc. So it's interesting because this kind of initiatives, and we've seen different initiatives for different blockchain, and Cardano's got its own version of projects that they're developing with a US provider. But it's interesting because this is talk about how easy it will make cryptocurrency access to the people that are not in it yet. So kind of like is taking down the barriers to entry in the cryptocurrency market. Although it's still, I mean, this is going to be a pricey way of getting involved, because at $1,000 it's not going to be a cheap handset. But definitely is kind of like moving in the right direction. Closing these as well. Let's not go. We don't have a lot of time left. One of the things within those within all the things that are going on in cryptocurrency at the moment, Cardano has pushed back a little bit the what's called the Vasil hard fork. From it should have happened at the end of June next week. Now it's being pushed back by a month, just to make sure that they worked out all the details before before they go live. So they decided to add additional tests to the Plutus is the programming language that programs the smart contracts on Cardano, and do something like some extra checks just to make sure in this particular markets right now to to make sure that all the I's are dotted and the T's are crossed. That's one thing, and the last thing. This is Philip Hammond, which is one of the past Chancellor of the Exchequer in the UK. Is actually come out telling us how the UK is falling behind in the area of digital asset trading, and he's saying, this is important because we've been talking about what's happening in crypto with regulation. And what's happening is kind of like jurisdictions are almost like fighting with each other to attract this kind of traffic, and the countries, they are more advanced into this and gives more certainty on the way that the authorities are looking at this, are attracting more investments. So this is where it's talking, the jurisdiction, they have embraced this technology, they have regulated it properly, and effectively will be the ones that develop these markets, and they will become the new hubs. So this is not small, because at the moment the industry is still very small. As it grows, it will tend to coalesce around countries that make it easier for players to to get involved and make things, because now, as you know, capitals move very, very quickly. So, and many of these organizations are not geographically located in one place. They got people that work for them from all over the world, so they don't really care where they their head office is. They can place it anywhere they want, but they would put it in the place where it will make more sense for them, and it will create the least amount of friction in doing things. So it's interesting that now people are starting to take notice. And there was another, I don't have it as an article to show you, but also from the central bank, the UK, central bank was saying that the survivor or this crypto winter that we're going through right now could be the next, Amazon of the future, which is interesting from an institution that has been kind of pummeling crypto for the past couple of years and saying everything they could negative lately, and while at the same time, we go just to show, to close on a kind of like cheery note. Talking about the UK now, the UK debt has broken the 100% of GDP. Okay, so when you talk about gross debt, is in a way kind of like if you think about every year, you have a budget. Okay, so money that comes in through taxes and money that you spend, as a government to do all the things that governments do, and then if you spend more than you than comes in, there is a deficit. Okay, so because kind of like you're spending too much, so then you finance that through the debt, as you would do in your own way. You either get credit card debt, or you get a loan, or you get a mortgage. So that's what you do, on a personal note, as a government, they finance the debt through, selling bonds. Okay, so it's not necessarily that, just having a large debt, it means that you're in big trouble. It just simply, what it means is that, as the amount of debt grows, so this debt, they will need to pay interest on. And who did they pay? They pay interest to the people that buy the bonds. Now, why I wanted to mention this to you is because thinking about going forward, as inflation is going up, and that lately interest rates have gone up, both in the US and in the UK and in other countries. Now, the Bank of England needs to pay more money on the debt. And these are not small sums, because raising interest rates by 1%, you can see that the debt is 2,000 billion. So 1% of it is 23 billion. So it's not a small sum of money. If you think of the whole NHS, the whole education system costs about 100 billion per year, you can see how significant this is. And also it shows you how the governments have got their hands tied in a way, because they got runaway inflation, and the only way really they have of controlling inflation is to put the interest rates up, so that they raise the cost of money for you and me. On the other side, they need to pay more interest on the debt they already have. And where do they get this money? Where do they get the extra 23 billion, the extra whatever? If the interest rates went up another 1, 2, 3%, this amount will go up. Where do they get it? So they need to get more money in, and generally this money in is tax money. They can't really, in a depressed economy, they can't just raise taxes to get that. So they normally bet on the economy doing better. So as the economy grows, then the taxes that come in also grow. But we are going in a period now where the economy is not growing at all. Actually, we are likely to go into a technical recession soon. But at the same time, the money that they have to pay out is growing. So you see what the problem is. And as they also grow the interest rates, and the price of money goes up, the economy goes down, because if things cost more, in the point of view of businesses have to spend more to be in business, and people have got less money to spend with businesses. This is kind of like a really bad spiral that it doesn't, it's not kind of like going to end well for anybody. Because also, when you think about it, when this money that they're paying out, where do you think it comes from? It just basically, the more the government owns, the less the money in your pocket is worth, because we pay for it one way or another. Okay, so this is just like to end up in almost like I hope you take it from, it's almost kind of like a lightweight way to tell you, guys, this is the reason why we in crypto in the first place, because this is what happened. This is what's happening with your money, and we go kind of this percentage of debt as a percentage of GDP is grown in the past 2 years, but over it's grown from 80% to over 100%. And it will. The point is that although you can see before, in the years before, it actually gone down slightly because the economy was doing very well, it is very difficult to get this number down. And now we kind of like you can see here. These are, by the way, this is the Office of National Statistics, so it's not things that we somebody else is making up. These are official figures of the UK. Okay, so you see how these are growing, and also you can see how the UK is going higher and higher compared to other EU countries in the amount of debt that they have. And now the debt in the UK in percentage terms is higher than the average of the EU. And this is the country that spent where the debt has grown more during the pandemic. So all this is where all the furlough has gone. So all the furlough is just from the national government point of view. It's been like they in a way, like if you didn't have any money, let's say you didn't have a job during the pandemic, you could have got money by getting a bigger loan out of your mortgage, for example. So this is what the government has done for you. So you haven't personally got any debt, but the country has got a lot more in debt than it was before. And now, I can say the UK, compared to some of the countries that have been more frugal, like Ireland, which haven't grown their debt at all, pretty much only 0.4% during the pandemic, the UK instead has grown the debt by almost 20%. Only Spain, Italy, and Greece have actually grown their debt more during the pandemic. So just a little bit of food for thought. I mean, it's still the UK is not the highest debt in the G7. So Japan is by far the highest, got the highest debt as percentage of GDP. And it's lowest than Italy and the US, and still lowest than the G7 on average. But the trend is what is worrying, because it is going up very, very rapidly. And it's not, especially now that we have left the EU, so the trade has become more difficult. Yeah, I would, if I were you as well, I would keep an eye on these statistics, and it's something that you can, if you can check on the Office National Statistics if you're in the UK, you can check these numbers yourself. But keep an eye on these things, guys, because this is very, very relevant, very, very relevant on mine and your life if you are in the UK, because this is what the government is doing with our money. Okay, so just have a look at the deficit, by the way, which was very low when the economy was doing well, but now we've gone from 60 billion in 2020, 327 billion in 2021. We still don't have numbers for 2022 yet, but it's still expected to be a big number. Okay, now I've been going far too long. We got 10 minutes left for questions. So let me stop sharing now and take some questions. Okay. Cornelia, I don't know, because you were in Holland, so you might be the one that's affected by this. I'm not sure. So this is the kind of thing that maybe you can ask Coinbase in your country and see what you have to do, and then maybe you can let us know next week. I'm not quite sure. But from what I was reading in the article is that you don't have to do KYC to move into another Coinbase wallet, but you do if you move outside of Coinbase. So probably you do. Connie, okay. How are your transfer costs? That depends from coin to coin. It's because you are transferring on the blockchain as opposed to an exchange. So it is whatever the transfer fees are for the coins that you have, then you still, you would have to pay those. So if you have Bitcoin, then you got Bitcoin fees, they generally are $7 or $8. Ethereum changes all the time. So depending on the coins that you transfer in, really. Government debt problem is by higher taxes and hidden inflation. It's not. It's how can I explain it? It's if you just see it in a personal way, it's the government spending more than they have coming in. So if they spend more than what's coming in, then the debt goes up. And it's the same way that if you have a wage and you live beyond your means, and in the end you would have to some way have somebody else's financing your your lifestyle. So how would you do? You would either get a loan, or you get, some people live on the credit cards. The problem is that once that repayments on your loans are more than you earn every year, then this is where the problems start happening, because you only have the one income, and if you need to spend your income to service your debt, you can't spend it on other things. So that's the problem that we are facing.
Okay, but then, but if they're doing that, sometime or another, they would have to get the money back from you, from somewhere. So then I heard you say that they would go and get it via higher taxes. So in the end, we will pay altogether.
Definitely. Yeah.
So
that's the thing. And so they either get it from higher taxes, or they get it by the value in the currency.
Yeah. So it is.
So and this is what it's been in the news in the UK, because the price, the value of the pound against other major currencies has gone down, and this is the way it happens. Italy has done it for many years. Before they were in the euros, every couple of years they would just devalue the currency, so to make their goods more attractive to foreign buyers. But at the end of the day, when you go and buy stuff from abroad, it will cost you more, because your currency now is worth less. And it's one thing. So governments cannot technically go bust because they can print money. It's just the value of what they're printing goes down. So what they give you goes down all the time. And inflation is at the end of the day is a tax on your savings. So yeah, unfortunately, it's difficult to get your head around. If like we've been born and been living in this kind of like fiat world, most of us, or most of our life. So it's sometimes you're thinking, well, this is what they're doing. It's a hidden way to get money from you. So in a gold standard economy, the only way that the government could get the money is through tax. So they will need to physically come and get the gold from your hands, which it raises a lot of questions, because then you think, well, what are you doing with my gold? In this way, they take money. It's as if you had a hole in your pockets and money is falling out of it every day, but you don't realize it. And so this is a wonderful mechanism for governments to get what they need without you knowing, and without for them to having to justify themselves to you. So this is why Bitcoin was created in the first place. That's the exact reason why it was created in the first place, and that's why it's grown from zero to the whole industry to what it was last year, over 3 trillion in worth. Although now we've gone down to about 1 trillion, but this is why it's grown so much in such a short space of time. That people are becoming more aware of this, and they are looking for alternative way of storing their wealth and their value, because your wealth is your value that you create through your work. Abby, can I find a tutorial to move coins from Binance to Kraken and Ledger? We have covered it on several of our videos. It would be on my Discord, Abby. So we got several videos where we've done that. But it just basically just a transfer. So the first thing you need to do is having a wallet in the first place. So whether it's your Ledger or your hot wallet like Exodus, Atomic Wallet. Another ones, Pierre as well was asking what other wallets you can use. Coinbase wallet as well is another big one. Trust wallet, Math wallet is another one, but there's literally hundreds of them out there. Cardano has its own wallets as well. So there's plenty out there. I wouldn't want to mention one name above another. really. That to actually move your coins is a simple transaction. So it's just a sending transaction from A to B. So that's what it is. But if you are new to it, Abby, the one thing I would encourage everybody to do when you're doing these things for the first time, always do them with a small amount of coins first. Even if you have to pay 2 transaction fees, you know, always make sure, because we're in the decentralized world here. So there is no customer services that can recover your funds if you do something wrong. So you know, if you had, let's say, £10,000 worth of Ethereum or Bitcoin or something to move over, just send 50 pounds first, just to check it if arrived, check if you've done everything right, and then once you are sure that you've done everything correctly, then you can transfer the rest of the funds. Paul and Maria were saying, would you consider closing liquidity pools as well? It depends. It depends on what the liquidity pools are for. So it's liquidity pools are you providing liquidity for for the market, for people to do decentralized exchanges, so to exchange one coin for another. So the liquidity pools are only as good as the coins that are in it. So if you trust the coins that are in there, for example, you could provide liquidity for, I don't know, BNB Bitcoin pool, for example. Okay, now you might take a view, you know, whatever happens, however badly the market goes, you know that at the end of it, BNB is still going to be there, Bitcoin is still going to be there. So your liquidity pool is fairly safe. But if you're providing liquidity for, I don't know, Bitcoin or whatever, or BNB, and you know the new token that just come out, you know, and that token starts going down, that token must simply not exist anymore in 3 months' time. And so your liquidity pool value would be, you know, very, very low, or very close to zero, because your good token would be sold off to support the bad token. Okay, so it's really, liquidity pools are very much very, very dependent on the tokens that you put in the liquidity pool. So I would be very careful at the moment to put risky, to support risky tokens, because those may just go and disappear. Okay, no problem. Okay, I need to be off now as I have an appointment shortly. Jonathan, I keep sending people to Jonathan's events at 9:30. Cardano focused event. So Jonathan, if you don't mind sharing the link again. Sorry that I haven't given you a chance to talk today. And by the way, it was lovely to meet Jonathan live. There was a Cardano event last week where we shared a beer or two, and it was really nice to see people in real life again. Just before we go, I don't have it with me. I'm going to post a link to an event that I'm going to be at on the 4th and 5th of July. And especially for all those of you that are in the AIW, we are going to, as we're already going to be there, on the evening of the 4th, which is a Monday night, we're going to have a social for all the people that are into AIW around London and the UK, to meet face to face and have a drink together and have a nut, and so have a chat and discuss things anyway. But for those of you that want to come, the event is going to be on the 4th and 5th of July. And let me just put the. If you just give me a second, and it's just I've got the links on WhatsApp, so I can send you where you can sign up for the event. The event is free, so you don't have to pay for anything, but you just need to register. Let me just give me 2 seconds. And by the way, it's in a restaurant which is just in front of East Putney Station, so it's going to be in kind of central London. Okay, just a second. Okay, so this is the link for the first day. Okay, and I'm just going to give you also the link for the second day. So the first day is the 4th of July, and the second day is the 5th of July, so Monday and Tuesday. So the social is going to be on the evening of the first day. So from we're going to be there all day anyway. So if you want to turn up, we're going to be there. But as a social is after 6:30 p.m. on the Monday. Okay, we're going to have a table for AAW. So if you're not already in AAW and you want to hear a bit more about it, we'll be there to talk to. But if you just want to come for a drink, then from 6:30 onwards, we're going to have a session. Okay, so goodbye everyone. Have a fantastic weekend. Enjoy the nice weather if you are in the UK, and if you are in New Zealand or Australia and it's starting to get into winter and it's cold for you, I feel sorry for you for once. not really, but I know you got it better than us for 90% of the time, so we can gloat a little bit from that. All right. Okay then.
Thanks,
Okay.
Luca.
No problem. Goodbye,
Thanks.
and I will see you again next week. Oh, sorry. Just last thing. I'm not going to be here actually next week, as we're away helping our son move in Leeds, so won't be able to run a crypto hour next week. But we'll be back in 2 weeks' time. Okay. So
Thanks, Luca.